You say you're looking for better clarity on COVID pressure. When is it going to be too late?
You know, I think I hope we get a vaccine by year end, but that's not going to be the end of it. You have to have people in cinemas that are willing to sit for 3 hours in a cinema with strangers. You have to have people willing to go to a park where there's thousands of people touching everything you touch. So it isn't just, it's fear in addition to actually having a substantive solution. And I just wonder if the physical world is going to come back to January of 2020 levels for 2 or 3 years.
And in the meantime, is the pivot to digital and direct not enough for you?
It's really not enough for me because we saw their losses went up from 500 million loss last year to 700 million loss this year. We're at 60 million subs in 9 months. Kudos to them. That's for Disney Plus, 100 million paid subs between Hulu and ESPN Plus and Disney Plus took Netflix like 8 years to get to these numbers. So they're doing a really great job of building SVOD, but they're still not making money at that. They're still losing money. So that doesn't help us from an earnings per share or free cash flow metric point of view.
Laura, do you think that demand was where it should have been for the parks when they reopened? Do you think that they should be lowering their prices to get more people to attend theme parks in this environment, even despite the reduced capacity?
I absolutely do. I think almost all physical assets are going to have to lower price points, which goes for professional sports, in-person games, and all of these physical, whether it's cinemas or parks. I think we're going to have 30% price cuts to get people to come back into the physical world, because you're essentially putting your life at risk, or you're taking higher risk than you thought you were in January, even after a vaccine, since there's so much unclarity about whether you can get this virus twice. I think that fear level will lower demand structurally. And so by lowering price, you try to generate demand over time.
Hey, Laura, it's David. Investors seem, though, almost solely focused on direct-to-consumer, in a sense. I mean, it's somewhat reminiscent of another name you follow very closely, Netflix, in that if subscriber numbers keep going up at a very rapid clip, nothing else seems to matter. Do you agree with that? And when will it not matter?
You know, I don't agree with that. I mean, I think there's plenty of stocks we can all buy. Like Disney's down 20% year to date, even though it's up over 30% from its lows. There's lots of stocks that benefit from COVID. Amazon not only benefits from COVID, but also benefits structurally because so many people have moved online for grocery shopping or for the first time, just e-commerce shopping. That benefits no matter how long COVID is. Peloton bikes, awesome winner from Peloton. Roku, awesome winner from COVID. So I think there's plenty of places that benefit from COVID, regardless of how long it lasts, because they benefit both short-term and structurally. So I don't understand why we have to be arguing about Disney. Like, go put your money somewhere else. That's what liquidity gives you, the ability to allocate capital. Right. I don't think we need to be in the Walt Disney Company.
But, I mean, the company lost almost $5 billion. The stock's up almost 10%, it would seem, because they continue to grow very rapidly on direct-to-consumer.
Yeah, I think part of that, I would say, is ESPN didn't actually expense a lot of its sports costs, but those aren't cost savings. Those are cost deferrals till the sports comes back. So one of the reasons that we had media networks really over-deliver at the profit line, and almost all their profits came from media networks, is because ESPN didn't pay or didn't account for the cost of its sports rights. But as I say, those aren't cost savings. Those are cost deferrals to when sports comes back. So
Separately, sort of on theatrical distribution, Laura, I noticed this morning that Walmart is going to turn its parking lots into cinemas from August 14 into late October. And I can't decide if that is a positive sign of adapting to the environment we're in, or a sign that true physical movie theaters are not coming back the way we think.
Fabulous idea. Love the innovation. People want to get out, but they want to be safe. It would be good if some of these big screen big screen movies could be seen on even in a drive-in context. It would get people to remember how special moviegoing is an experience while they await cinemas reopening. I actually think it'd be good for consumers, certainly good for Walmart if they're charging, and I think it's a good development.